Welcome to the Signals Volumetric Trading Platform. I'm Young Wall Street. I'm the CEO and co-founder of Signals, and today I want to dive into the basic functionality of Signals, how to use it, and ultimately how to make some better trades. So, why use volumetric and order flow analysis versus just a composite chart that you can find on TradingView, uh, Ninja Trader, Interactive Brokers, Thinkorswim, all that traditional stuff? And that's a great question. I mean, for me, I've seen it time and time again where most traders are, they start out, they're on a trading view type of charting system, looking at candlesticks, throwing a billion indicators on a chart, and just hoping that they can get something out of that. Meanwhile, they don't even know why they're putting all these things on a chart. You got a billion lines everywhere, a billion different Bollinger Bands, and all different kinds of stuff that you're going to give yourself paralysis in your decision making by doing that. It's just too much. It's information overload. You're not going to be able to pull the trigger and feel good about it if you do stuff like that. How do I know? Because it's happened to me. I've been through it. I started out 13 years ago, and I was doing the same things. And ultimately, I was lucky enough to be surrounded by some very, very intelligent people that taught me the right way to do things and how to get my thought process a little bit more sharpened up, cleaned up, so that I don't make some rookie mistakes. And lucky enough for me, I listened, learned. It's still a learning experience and a grind. 13 years later, trying to make this happen, I'm still humbled consistently, just realizing all of what I don't know. But what I do know is that had I not listened to the people who mentored me, I'd still be making a lot of the mistakes that most intermediate to novice traders are making. So Signals is a platform that gives you the ability to look at multiple markets in a multitude of ways, especially when it comes to order flow, volume profile, and price action, because that's what it comes down to, learning about what's happening now. And that's the main difference between your traditional composite charting systems that are just candlestick charts. They give you some classical TA to overlay on the uppers and the lowers and whatnot. And then from there, it's up to you to make a decision. Day traders especially have a hard time with this when they're starting out, because it's kind of like death by a thousand paper cuts at a certain point. You throw all these indicators on a composite chart, you go across these small time frames all the way up to big time frames, and you kind of just get lost in the sauce. And to be honest with you, there is no sauce in throwing a bunch of indicators on a chart and thinking you're going to find this one edge that exists to only you and nobody else, that nobody's thought of before and shared. This is why you see most professional traders, especially day traders or proprietary traders, are using, they scalp off the depth of market. They use footprint charts. They use order flow analysis, volume profile to assist them, because it's very difficult to get an edge any other way. It's just a simple fact. And the sooner that most novice to intermediate traders realize this, and it's not so much the intermediate guys, because a lot of these guys already start to realize it after a while that something's not working, something needs to change. And that's where their journey to order flow usually starts. So the earlier you start with order flow, and the earlier you get comfortable reading charts like this, and using what's happening now to guide you in your trading decisions, the better off you'll be. So with that being said, when you log into Signals and you create your account, you come onto a main screen like this, and there are 3 different modes you can toggle between. This is buy sell stacks with imbalance. You click again on the chart, you get delta, right? The delta of each candle at each time price opportunity, okay? And then you click again and you get the total volume traded at any given level. And the same for down here. Total volume, the buy-sell splits in terms of volume, and continuous delta. This isn't a cumulative delta. This is a continuous delta that runs on something proprietary that our CTO created to keep on top of a 24 by 7 by 365 market. It's very difficult to keep track of all the immense data points that we're scrubbing and displaying to you. So in order to make it somewhat actionable in a way that takes into account that this market does not ever stop like a Forex or a futures or a stock market, we've had to do some things creatively to ensure that you're getting accurate and on-point readings across the board, not just with the delta down here or the charts up here, but across the board from the way we intake data to the way we scrub it to the way we display it to you. So again, overall volume. Okay, and on the side here, it's the same thing. Overall volume, you just give it a click. Now, click again here, split volume. Okay, there you go. Buy, sell, splits, buy, sell, splits, delta, delta, delta. Okay, so you can use it in a number of different ways. It's not a one size fits all. You can use this in a number of different ways to ultimately get down to the bottom of your thesis that you may have about entering or exiting a trade, and you can see what's happening inside the candle, something that a trading view does not offer, and you'd have to use a software like Signals or something else like it to ultimately understand what's happening inside the candle. Okay, so that's why it's more beneficial, in my opinion, to use order flow analysis and volumetric trading software such as Signals, as opposed to just throwing some indicators on a composite chart and breaking it down across a billion time frames and hoping you see something that ultimately you're probably not going to see. So, and then you'll also in the process most likely give yourself decision-making paralysis, where there's too much going on in front of your face for you to make a decision and feel good about it and put your money at risk. So with that being said, those are the basic modes, if you will, of Signals. And we do offer overlays, so you could throw VWAP on here as well, and you'll have VWAP on here, the volume weighted average price. That's an overlay that you can use as well, and it'll give you a good idea of where volume is coming into the market heavily, and prices are being widely accepted and trading out. And it's good for a number of different ways to time your trades, to ultimately just keep on top of where the momentum is going in the market. And there's separate videos on that in the Signals Trading Academy that you can take a look at if you want to learn more about that. So with that being said, now we're going to talk about how to basically take advantage of all this stuff, right? And in the little corner down here, you'll see our order flow imbalance indicator. It's kind of like it's basically like a running average of what's happening on the order book at any given time. I can't get into specifics, but what will happen here is that we'll take a running average of the order book and trades that are coming in, and you'll get a good idea. These are all sigmas, right? So 5 sigma to negative 5 sigma with a 0 line, and sigma is just a fancy way of saying standard deviation, right? So when the order flow gets really heavy, you'll see this thing go very heavily plus or minus past the 0 line, and that gives you kind of the second derivative of the order book, how much pressure, the rate of change on the order book. So you have an idea of really who's trying to take control at any given time. And then you'll see here these boxes, right? We have the actual order book for the exchange that we're trading on. So these boxes here will fluctuate in color and they will move around a lot. The brighter green, like down here, you'll see means that there's more resting orders in the lower half of this trading range, and vice versa. Up here, you'll start to see red to dark red type of squares pop up, and that is an indicator, like right here. And here, you'll see that orders are coming in on the sell side, resting at certain levels, and you'll get an idea of who's trying to take advantage of a move at a certain level. And here, these other little blinking almost like rectangles here is your cancel replace rate, the way that orders are being placed or ultimately canceled and replaced somewhere else. So once you start to get a feel for how this all works, you kind of, it becomes second nature to just break down the psychology of who you're trading against, because trading is a zero-sum game. You can also see how many orders are resting. If you look in the top left corner, you'll see 104.66 with a delta of 0.04 and OFI of 1.94. All right, so you can see exactly who's resting where, at what level, how much volume's there, what the cancel replace rate is. It's very useful, and we'll continue to dive more into that in separate videos in the Signals Trading Academy and additional content videos. This way we keep this very to the point, succinct, just what's the basic functionality of signals. So with that, being put out there, we know the basic utility of it. So let's get a little bit into imbalances, because this is where stuff becomes a little bit more interesting. And when you read a chart like this, like a buy-sell split chart, or what's otherwise known as a footprint chart, in most cases, a lot of people will call this a footprint chart. You read these diagonally. Okay, so here we have a buy imbalance, and it's read this way, diagonally. And it may look counterintuitive to some people who are used to using other software. Here we have buyers at the ask, which you'd usually see on the other side, and here is sellers at the bid. Okay, so the reason why we have it this way is just to make it a little bit easier to newer guys who are fresh coming in to get an idea of how, what's happening. Obviously, if a buyer is lifting the ask, it's bullish, right? It's lifting the price higher. Okay, so it's displayed on our end this way, and vice versa. If a seller is pounding the bid, it's bearish, because they're taking the bid lower and they're moving the market with it, most likely. We're going to have an option in the future where you can revert these the other way back to traditional, the traditional view, if you will. But that's just to clear up any confusion that may arise, because there are people that have probably tried to learn this in the past, and I don't want anybody to be confused. So just remember, when you look at this side, you're looking at buyers lifting the ask, and when you look at this side, you're looking at sellers hitting the bid. Okay, so obviously, again, if a seller is hitting the bid, that is bearish. If a buyer is lifting the ask, that is bullish. Okay, and that's how markets work. Okay, the imbalances work how you would, just based off how you'd read a footprint chart. And when you're looking, you'll always look diagonal. Okay, you're from this way to this way, you're looking down and to the right, and vice versa. Up here, you're looking up and to the left. Okay, so realistically, when you're looking at stuff like that, that's how you read it. That's how you find imbalance, and you can see the clear imbalance right here. Okay, obviously we had 144 Bitcoin in volume trade out on the bottom of this wick, because now again, this is your footprint, the actual footprint bar. These levels right here, where there is no body, are the wicks. So if you were comparing this to a traditional candlestick chart, these are your wicks. This is the body of the actual candle, or the footprint, and this is the top side of the wick. So when you look and you compare, you see 144 volume is traded out at the bottom here, and then the immediate next level up, there's a huge differential in buying, right? So what this represents is a potential bottom being made in this instance, right? Where when price pulls back, it'll likely pull back into this area like it did over here. It overshot it a little bit, which usually does happen. You'll notice support and resistance tends to overshoot or just miss in some cases. Sometimes it plays out perfectly, lightly taps an imbalance or an area of interest, and then it'll go. So you see that we caught a bottom. Like realistically, when we look at it here, about 38.4. The bottom of this was about a little less than $1,000 lower, about $900 lower, $800 lower. So it provided a decent area of support and ultimately showed you, before it did correct, you got yourself a decent little rotation higher. And when you read the sell imbalances, just the opposite, up and to the left. Once we do convert these or give the option to convert back to the traditional view, you would just flip that around. So that's how you read it. And usually what you see when you get these imbalances, if buy imbalance, let's say, starts happening all the way up this stack, and we start to realize, we're getting big buy imbalance, big buy imbalance, big buy imbalance the whole way up, but it can't break out of the range or of the top of the candle, or the cluster it's trading in. Usually that indicates that we have some trapped longs and we're going to get a pullback. And then you'll usually start to see sell imbalance develop, because if we look here, we have a big amount of volume traded here and a small amount traded here. So it's just the next level down from the top, and then we start to see that pullback. And here we have big indecision. You can see here it's a jockeying for position. Next cluster opens up. When we look at it, we see there's a big differential in buying and selling based on this limited trading activity, really trying to jockey for position. You see here, a couple thousand, or about 5,000, 6,000 traded up here versus 420 down here. And then same here, we have about almost 4,000 volume traded here, and only about 13 coins traded up here. And ultimately, we wound up pulling back into the previous area of imbalance. We get a little bit of profile low test, one ticker, and we start to move back up. So that's one way you can use imbalance to your advantage is, you'll see in these type of situations where buyers are aggressively coming into the market relative to the last level of selling activity. Usually marks some kind of support or a bottom, and ultimately it signals that buyers are getting aggressive and we start to push higher, right? And like I said, if we start to see at the top of the wick or the middle of the candle, near the top, that there's a lot of buy imbalance, it may indicate that there are some trapped buyers, and price ultimately will pull back to the other side. And we saw that we didn't really get a crazy amount of buy imbalance here, but we saw sell imbalance developed once we got to the top of this this wick right here. The next level down, we see a huge differential, about roughly a big differential in buy sell activity. And ultimately, we did get this pullback, slightly on the next cluster. A lot of indecision happened here. Market didn't really go anywhere these are 4-hour candles, or a 4-hour cluster. So realistically, for 4 hours, we kind of just chopped around in this little band around this resistance level, because again, just how this provides support. This shows you that, buyers have gotten tired and sellers have came back into the mix with force. Indecision, ultimately we pull back and we start to reverse higher again. And that's really how you'd use something like that to your advantage. And using stuff like this to your advantage, it's great to have the VWAP on, because you see here, as this dot printed and we started to cross over, we got negative slope on the sell imbalance, and we started to pull back right into the previous imbalances range. Right after we pass it, we get that new sell imbalance on the print, and we start to level out a bit. Again, continue leveling out, and then we start running higher. So it's good to use all of this stuff together to get an idea. Use the Signals Trading Academy videos to dive deeper into each individual topic. Like, this is meant as like an overview, so we're not going to get crazy into detail on this video. But just something to keep in mind as you use all the pieces and put it all together. And also, when you switch now, we get an idea of same thing here. We start to see where there's immense amount of buying and selling, okay, with the delta, okay, on these clusters. You see the same thing. You have the body of the cluster, the wicks. See how there's no body here, and down here, really no body, no body, no body. Here's the body, okay, and here's your continuous delta. So when we see these prints, this is what you expect to see: green delta on a big green bar, green delta on a big mostly green bar, and here we get a negative bar. We start to see the bottom of the candle. We get some sellers coming in net, and it does produce a delta that is negative, and we get the crossover in VWAP. We start to slope back a little bit more negatively, but see what we get here again. It's called a naked point of control, basically, right? And that's another topic that we're going to talk about. So naked point of control is basically a point of control that was established, and price just started pulling away from it, and it created a support or resistance level. And like I said, you usually get these tests of this resistance or support where they kiss it slightly, try to tap it. They flirt with it. It could go one of two ways from here. It can obviously break through and continue testing back lower until it finds support again, or it can establish itself as a little bit of a longer term support and move away towards our next area of interest a little bit higher up, or look for the top of these clusters for resistance, whatever it may be. But ultimately, when you see these purple lines, they're naked points of control. They're just points of control that were starting to establish themselves, and then price continued to move away aggressively from them, ultimately making them magnets the same way imbalances are, as support and resistance. So that's something to keep in mind as well. The yellow lines are unfinished auctions, and they're just they're a part of the auction theory process where, when you use auction theory to trade, auctions come down to either finishing themselves or remaining unfinished based on certain volumetric signatures that they leave behind. We have separate videos on that you can go ahead and take a look at. Again, very staunch support and resistance usually. They're magnets. Price is attracted to naked points of control, to unfinished auctions, because the market is always seeking balance. It's always seeking... markets are very simple. It comes down to liquidity and people that are moving that liquidity around, right? That's all it is. And liquidity always seeks efficiency and balance. So when there is inefficiency or levels that may be imbalanced, or there's something on the tape that, not anomalistic, but just something that needs to be corrected and trade out, usually this is why Signals is beneficial, because we display these in a way that makes it easy to see. You know where the imbalance is, you know where the naked points of control are, you know where unfinished auctions are, and ultimately price will try to retest these levels and trade out and create or correct the inefficiencies and ultimately seek balance. That's what auction theory, volume profile, order flow analysis is all about, and Signals helps you with that. So Delta also gives you a good way, these Delta charts, to see absorption. And absorption is simply when price is moving in a direction. Let's say in this case, price is moving down. You see, we have a very thin delta cluster right here. If absorption started to happen at this level right here, down at this NPOC, and we start to see that, let's say the order flow imbalance, like the amount of orders coming in, starts to get very, very heavily skewed towards the bid side, where there's a lot of bids coming in more aggressively than there are offers, and then here they actually trade out, meaning that these orders don't just rest, they actually trade. You'll start to see this turn green while this cluster and footprint is red, right? So as this is red, and let's say we trade into here and we start to get that absorption, meaning the market is absorbing the sell pressure, and then prints a green cluster here, and we start to move away, pull away price-wise, that'll give you an idea of where absorption is, or where there's levels of interest that buyers are setting the floor, for example, and vice versa. You'll see it, with as price is moving up and hitting resistance. It may be like you have a big footprint bar like this to the green side, and you're tapping against this resistance as opposed to support, but you have a thin green delta cluster that ultimately starts to become red as we can't break through these highs and we run into these sell walls right here. You'll start to see the absorption on the other side as well. So that's a way to use all of this to your advantage and to get an idea of where there are levels of interest, support, resistance wise, and where you may want to enter a trade or cut a trade early or stop yourself out. This is how you use all of what's happening now to glean this information, whereas a traditional candlestick chart would not do that for you. So it's very important to wrap your brain around this and make sure you understand it, whether you're using signals or anything else. So that's very, very important. And then realistically, the last piece of the equation here is volume, the overall volume. Because what it comes down to is sometimes you get these moves where it's happening on low volume, these breakout type moves, momentum type moves happening on low volume or relatively low volume based on previous, time periods, time price opportunities trading out. And you want to be cognizant of what's happening at any given level at any given time, volume wise, and that you're not essentially like buying or selling like a low volume fake out, a move that's ultimately going to revert itself. You want to make sure you're trying as hard as you can to enter into areas of the trading range and profile where you have higher probabilities of catching the rotations you're looking for, as opposed to entering into parts of the range or profile where you're going to be caught in no man's land in high participation areas where price just kind of goes sideways. You know what I mean? Like you'll see these high participation areas, especially around point of control, where these are the most commonly accepted prices. It's agreed upon that this is fair value. This is fair. This is a very fair price. And when you're trading at a fair price, if you're buying at what's perceived as fair, right, you're not really, granted, this can continue to go up. No one's saying that it can't. But your probabilities of this now starting to pull away and find or seek to correct inefficiencies where there is lower participation, right, outside of what's perceived as fair value, that's where things get interesting. That's where you start to put all of this together and you start to understand where your edges are, where you're going to catch rotations based on like simple order flow and volume profile techniques. And we have all these videos separately where you can go watch them. I just want to give you an idea of how to put it all together. And when you look at the profile real simply, 70% of all trading activity is going to happen within this area, the shaded part. This is 70% of all of what you're seeing is trading activity in this area. Outside the tails are the profile highs and lows, the value areas, the value area high, the profile low, value area low, and ultimately, this is where if you were going to sell or short, this would be where I would start to look based on all of this trading outside of what's perceived as fair value. Or if I was looking to bid, I'd be looking to bid somewhere outside of what's perceived as fair value. And that's why you notice all of these sellers hanging out up here outside of the value area and all of these buyers down here hanging out outside of this part of the value area. And you can even see they start to chase a little bit closer to perceived value because sometimes you won't get that deep pullback. It's a great way to trade if you just sit there and wait, and it's really ultimately how you won't lose a ton of money and you'll win a lot, but you won't trade a lot. So you'll see people trying to chase, they might hop in here, oh, I got filled and it started pulling back. They have stacked orders, bang, more, and then it'll start to, just be like a pyramid of orders being filled to aggregate a price for them, like an average price that they were looking to get, hopefully. And, just based on fill 1, fill 2, fill 3. So that's another way to kind of get an idea of how to use all of this together to your advantage. And if you have any questions, obviously feel free to leave them in the comments. It'd be better if you hopped in the Discord, because at the end of the day, we're always in there. We're always talking about shop and trading and all kinds of good stuff, and always willing to help wherever we can help. This was obviously just a basic overview of how to use all of this to your advantage. We've gone almost a half hour at this point, I think. So I'm going to end it here. Make sure you like and subscribe. It helps us out tremendously. Visit our Discord. Everything all the relevant information that we have, Discord, Twitter, the trading platform page, all that good stuff, Substack, is all in the description. And, I hope to see you guys again soon. Have a great day.